Today's update is going to be short and sweet, but we started the week with the 5-year treasury at 4.17 and the 10-year at 4.16. It's come down over Tuesday and now Wednesday, the day that I'm recording, slightly, but Jerome Powell did just give a speech, so we'll see how that affects rates. Now, before we get into Jerome Powell, our favorite guy, last week core PCE came back in line with expectations at 2.8%, which was good news for treasuries. That's why we saw them pull back some. Now, we got some reprieve from the spike we saw in February, and the odds for a rate cut in June are still more than 50%. So, J. Money Powell's speech today. Basically, the gist of it, if you didn't want to watch the whole 2-hour speech, was that he's not in a rush to cut rates, but he will be cutting rates this year. So that was pretty much it in a nutshell. I don't think it was anything shocking or surprising from the market. I think when he pivoted last year that we saw treasuries drop significantly. So he's being very careful about his words so that the market doesn't take it and run with it, because honestly, rates dropping that quickly probably isn't good for the economy or for their goals of getting inflation down to 2%. So basically what he said is that the Fed members are not assured that inflation is on its way back down to 2% and that it's under control. So that is the reason why they're not in a rush to drop rates. That being said, I still think we're looking at a rate cut in June, but it's getting a little dicey as to whether or not we're going to get rate cuts every single month after that. And it's super data dependent right now. So it really depends on what inflation comes back at, what the unemployment comes back at. So we're going to have to keep watching those numbers as we go. Now, I know that I'm hearing everywhere about companies laying people off and people losing their jobs. I'm hearing, some of my kids' friends at school, moms have decided to stay home because they got laid off and, this kind of stuff. This is the stuff that I'm hearing. We have clients that are doing loans who've gotten laid off mid-transaction, and so they can't maybe move forward with a loan. So I'm hearing these things, but the data needs to actually show that unemployment is going up and that inflation continues to go down. So I know that we got that January report. I talked about this last week. The January inflation report is historically high, but I do think that the Fed needs more assurance, meaning we need 2, 3, 4 more months of reports coming in at expectations or below expectations for them to actually bite off on the fact that this wasn't a re-acceleration of inflation. It seems like everybody's just terrified of inflation re-accelerating. We definitely don't want it. It's not good for the market. So anyways, that is kind of what we're seeing. And, as for San Diego, at least in the residential side of things, there is literally no inventory of homes. I had to pull comps for a client last week to try to figure out the value of their house in North Park, and I could not find a comp. There were 2 sales within the last 6 months in all of North Park that were a minimum of 4 bedrooms and 2,500 square feet. The last sales were both in September of last year, which is insane because that's a pretty dense area. There's a lot of homes and things. So this just goes to show you that inventory still remains low, even with people paying these higher rates, unlike apartments or commercial, where our rates didn't go up really as much. It definitely didn't correspond with treasuries the way I was nervous was going to happen when treasuries popped that 30, 40 basis points. Our rates went up 10 to maybe 15, maybe 20 basis points with a couple of our lenders. But for the most part, they kind of just held tight. And I think it was because they weren't really buying that huge jump in treasuries. Whereas in the residential space, it's rates were at 6.5. And when treasuries popped, rates went up to 7. So that's a pretty big jump, especially when you're talking about buying in San Diego. That said, on the inventory front for apartments, I'm still seeing a lot of buildings really sitting. And that really comes down to a factor of cap rate and interest rate. So a lot of these deals that we're seeing have low rents in place. So maybe the going in cap rate is 3.5 or 4.5. And if you're looking at an interest rate of maybe 6% or even high 5s, there's still a pretty big delta there between the going in cap rate and the interest rate. So that is going to affect your loan dollars. But lately, people are just really shocked about the loan amount that they're getting. And if there is decent size spread, like a 1% spread even between the cap rate and the loan amount, you can expect to be putting 50% down, if not more. And that's what I'm seeing a lot of times with these deals, especially if rents are low. And like I said, that means the going in cap is low. I'm seeing like 40 to maybe 50% LTV. And I know it sounds shocking, but it's really just a function of the number. So we just need to see some reprieve in rates for qualifying to get higher loan amounts. So what I am seeing is either, if people aren't doing an assumption or doing a seller carry, they might be doing a bridge loan. And bridge looks a little scary on the interest rate because it's higher. Our bridge financing is best bridge financing is like low 8s. So that's kind of what we're seeing, So you've got to look at it as get your rehab done as quickly as humanly possible so you can pay that loan off and get into a longer term fixed rate. And then you've got the double-edged sword, which is you want a low prepay because you want to be able to refinance as soon as you can take advantage of a lower rate. So that's kind of what I'm seeing. Now, for this week, we do have a lot going on. We already got the Jerome Powell speech, so that's out of the way. But this week, we also get unemployment along with CPI and PPI, the year-over-year readings. So that's big information for us to get. It's going to give us a direction in terms of where rates are going to go. Obviously, we hope that those numbers come in lower or at least at expectations. So that will hold treasuries stable or keep them steady. So I will be back next week to report on that information and see how it's affecting treasuries. Now, I did say this last week, and I will be sending an invite. So if you are on my email list, you will be getting an invite to a event that I'm throwing along with a handful of other people in the apartment space, mostly probably people that you know and have heard of, but people who've been in the business for a long time and have been really involved. April 18th. We are holding an event at the Vault. It's a really cool space off Miramar Road or Dowdy Drive, it says, but it's like a Miramar area. They have a bunch of classic cars and things stored in there. So we did an event like this right before COVID hit, before it was a rent control event. We're doing another rent control event again because it is back on the table. So we are going to bring some people in to talk about it. We've got an eviction attorney. We've got someone, the vice president from the California Apartment Association. We're going to have a couple of other speakers in there to see what we can do about this and what the next steps are to take if you want to continue to be an apartment owner in San Diego. We need to get up and raise our voices, because it seems that the only people raising their voices right now are our tenants that are not happy that rents have gone up so much over the last few years. And this is not an issue of, greedy landlords. This is not an issue of homelessness like city council likes to claim. This is not one of those issues. But if we don't stand up and speak and we don't get educated and we don't start getting involved, things are not going to go our way. They're already not going our way. So that's what this event is about. You guys do need to be there. There will be a ton of apartment owners, apartment brokers, and just industry people there. So it will be a great event, and I hope you guys can join. Again, if I have quoted you last week, I should quote you again this week, at least update you on rates. Rates have come down a little bit, so do check back in, or if you have a refi coming up, check back in again. This is like an ongoing development with rates. That's something that you should be checking on every couple of weeks if you have a refi coming up in the next 6 months or so. At least just check in and see how rates are doing, see what's going on, all that good stuff. You guys have a fabulous week, and I will talk to you next week.